As we've just seen there, the NSE rising on Friday's session, earnings giving the market some impetus there, but being stressed is the level of volumes we're seeing coming through the market, and that really saying something about the kind of conviction that's out there, one would assume.
Yes, I think the low volume is an indicator that we've spent a very, very long time around these levels for the last few months, and that essentially supply has been hollowed out. And if buyers want to buy lines of stock, they're going to have to pay up a little bit in order to get the supply. And that's why you've seen quite sharp rallies since December in the likes of Kenya Commercial Bank, Safaricom, EABL. And that's a function of the fact we remain illiquid. Some stocks remain in a fat tail. And if you want to snaffle up some supply, you're not going to get it at these egregious levels. You've got to put your bids up a little bit higher.
Yeah, taking a look at where we're seeing some of that momentum come through. I mean, I highlighted earlier the banking space on the back of Barclays Bank having kicked off the earnings season. What's your view on the banking sector of the Kenyan economy right now? We were chatting to Yvette Babb of Standard Bank a little earlier on in the show, and she was highlighting that she's not too optimistic about economic growth in Kenya at this stage. Their forecast for growth for this year sit at 3.8%, and we know that banks' earnings highly correlated to GDP growth.
I agree with what Yvette was saying, and I would just also add that the key exogenous risk to Yvette's outlook on the Kenyan economy is the price of crude oil. We've hit another 9-month high this morning, and that to me remains a big wild card in making any sort of assessment on the GDP growth rate this year. I err on Yvette's side of the equation. I think growth will be a little bit slow. It typically has a very high inverse correlation with the electoral cycle, and the election is not far away. So I think she's right on that front. However, looking at the banking sector as a whole, it was absolutely crushed at the back end of last year as the interest rate hike started to feed through. And I think we had a very, very oversold situation in a lot of these banking stocks. And that's why you're seeing these sort of reactions that we saw out of Barclays Bank after they released their results. So I think there's a little bit of room to the upside for the big cap banking stocks. I think there's more room to the upside for the big cap stocks in general, as I see strong macro level demand for African equity and Kenyan equity as well. Banks look as if they got more headroom, especially the likes of KCB and Equity Bank.
Of course, room to the upside is what's being propelling these shares so far. I mean, last week we saw these shares moving higher, and on the back of the fact that they have been undervalued over the recent past. Aly-Khan, we've come across some commentary, though, that Kenya could suffer a further credit squeeze from here on out if a move by Parliament to control banks' lending rates were to succeed. What are you making of that potential sitting on the horizon?
Well, I think clearly every single parliamentarian has a loan, and I think every single parliamentarian has received an increase in their loan rate. So as a constituency, they're going to be a very vociferous one, and one that's got to be treated with some care. But I think in terms of Kenya, it would send entirely the wrong signal to global markets if a rate cap system was introduced. And therefore, I suspect after a lot of jaw, we shall see the situation prevail as was. So I, for one, think this is a bit overplayed right now. I think we're on a tangent where interest rates are going to come down. The speed is of the issue. But I think essentially we've crossed the apogee in the inflation rate and in the interest rate cycle. And I think it behoves the banks to move a little bit ahead of the curve and maybe start to tease out some small interest rate cuts in order to stave off this parliamentary move.
Of course, Aly-Khan, these are macroeconomic issues that affect the health of the Kenyan consumer. And within that context, we've had Safaricom seeing most active trade over the last couple of sessions. What are you making of that kind of momentum we're seeing that seems to be now renewed in Safaricom?
Well, as I was saying, you know, we've been trading on very small lots. This market has traded $1 million so often it's become a relatively frequent. This is an illiquid market, and what we're seeing is this high-level demand for sub-Saharan African paper. People looking through the noise and saying, you know, if we need 100 million shares, we're going to have to pay up 10-15 cents to get the supply. And you're seeing that play out in the likes of Safaricom, which has rallied, I think, 20% since December 9th. admittedly from an oversold position. I think the 12-month full-year result will be tough because of the first half, but essentially I think people are prepared to look through that. You know, Safaricom did see off a moment of intense competition from Airtel in the third quarter and fourth quarter last year. They grew voice minute usage by 1 billion minutes. Airtel, with this very cheap tariff, actually lost a market share. So investors are looking at that and saying, you know what? They've staved off the moment of maximum competition. There's a potential for recovery here, and I subscribe to that and look for Safaricom to continue to edge higher.